Welcome into a daily editorial here on the KE Report, chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. And Jordan, let's take a look at what happened yesterday with the gold and even gold stock sector, where the gold stocks had a very nice day. We're getting bought pretty much throughout the day, moved appreciably higher, especially compared to that gold price that also moved higher and bounced right off of around that 1500 level. And that came really after a lot of people were saying a gold correction is underway and we should be seeing lower prices for, let's say, GDX and gold. Did the moves yesterday change any of your assessment, your outlook in terms of correction coming for the gold sector sooner rather than later?
I'd say not really, Corey, but maybe at most a little bit. I mean, I think there's potentially we could see. I mean, if I know Powell has this Fed chair Powell has this Jackson Hole speech on Friday, which everybody is talking about. I personally, I hate that kind of stuff that's market moving for a day or two and everybody obsesses over it. Maybe if he says something super dovish, we could get some short covering and gold could pop to 1550 again or slightly higher, and the miners could pop up to their early August highs, maybe go a little bit above them. So I see that as, that's a possibility. But either way, Corey, I don't, whether that happens or whether the sector continues to correct and consolidate, it's not a huge deal to me as an investor first and a trader second. It's just not a huge deal because it's pretty simple, Corey. You buy things, and at least for me, if they go down 20%, I get stopped out, I sell, and I move on. If it does really well, I don't do anything. If it does more than really well, then I start to trim the position so it doesn't become too large, and I recycle a portion of the profits back into something else. So that's really my focus. And so I don't see any crazy moves coming up in the market. I'm just, my guess would be we're probably going to see more correction and consolidation in precious metals, with the caveat that, maybe Powell says something and we get a pop to new highs that is kind of a false break to new highs. So that's where I'm at right now. And I think, this is one of those, it's always important to focus on the companies and fundamentals, but this is one of those times where, you want to take a deeper look at the companies that you own, your portfolio, and make sure you're in the right things and make sure that you're in companies that have that have a potential fundamental catalyst coming. So that's what I'm doing. In addition, I'm also looking at what are the things that I missed in the last couple months, the stocks that did really well. You can also focus on those. And, if this sector correction has another leg lower or another leg sideways, that could give you a chance to buy into some things you missed in the last couple of months that have done really well.
Okay, Jordan, let's talk about that whole theory of look at the companies that you've missed, because it still is and remains a very selective market for these junior explorers and junior miners. You need to be producing some good drill results or some really good production results to get that appreciating share price and outperformance of the broad gold sector. But say you did miss one of these stocks and the stock has doubled or even tripled over the last couple months. How do you balance out not chasing it, waiting for a pullback, but understanding that, you're probably not going to be able to get it as cheap as it was about 3 months ago?
Yeah, that's an important point, Corey. First, you have to realize there's no, just generally speaking, you're not going to have like some fantastic buying opportunity again like you saw 3 months ago or in early 2016. It's just not going to happen. You have to remove that line of thinking from your brain, because if you don't, then you're gonna stay and not buy anything. You're just going to be, paralyzed by thought, and you're not going to buy anything, and you're going to eventually watch things move higher and drive yourself crazy. So you have to understand that, generally speaking, we're not going to see some massive, big correction where these things become, great buying opportunities again. Like, again, that just, it doesn't happen twice. So with that said, you can Now, obviously, every individual case is different. There might be some really strong stocks that correct 20%. There might be some that only correct 10%. So, you have to look at the chart of these companies. You have to evaluate the potential news that's coming. You have to look at their fundamentals and figure out, what is this really worth right now? What is it worth is it cheap right now? Is it worth a lot more at 1,500 gold, or is it, worth exactly what it's trading at right now? You need to look at those things and figure out, where are the values. And if something's a real value, then obviously it doesn't need to correct that much for it to become a good buy. Now, if something is just really strong and it looks like it's going to go higher, but maybe there's only a little bit of value there, and you really want to get involved, the best thing to do would be to buy a half position. You don't have to buy everything all at once. You could buy a third or even a half position if you really want to get into something, and then just wait. Because what happens is, you wait for a month or two, that thing is going to go lower, and then you can buy it lower and lower your cost basis. Or if it goes higher, great, you've made money, and then you can reevaluate, and maybe you have to buy the second half at a higher price, but you've already made money on it. So either way, you come out okay. So that is, at least for me, what kind of plan of action I'm looking for moving forward as I see a continued correction and consolidation in this sector.
Okay, and you know what? That is always important. Stick to the fundamentals of these companies and stay on top of what the companies are doing. When it comes to something like GDX, though, GDX recently topped out at that 30 level, right on the button, which is a little bit below that high in 2016. Is there any significance that you're pointing to in that high if we can, say, break that level now, sooner, rather than maybe by the end of the year or early next year or whatever time that might be?
Yes, it would be very significant if we broke through it and sustained that break. However, you'd have to keep in mind the weekly, monthly, and even quarterly charts, because it's possible we could break through it, but then we break through it on a daily and a weekly basis, but then on a monthly basis and quarterly basis, we don't. So that's kind of a false breakout in the bigger picture, is one potential worry. I mean, I'd love to see more consolidation in the miners, but you never know. We don't always get what we wish for. It's possible. I think that high from 2016 is around 31 and change, and it's possible GDX could, if we get that another new high before a correction in the sector, that would be the target for GDX. The high in early August was just about 30.00, and so if you were, as far as the short term and the potential for another slight move to the upside, that would be the target that I'm looking at, 31 and change, the 2016 high. I'm just not sure that the market and the miners are ready to break through and hold that break and keep running higher. I think we need to. I think it's going to require more time. I think the miners are still a little overbought here, and I'd like to see, you look at what's happening with bond yields. They're just going parabolic to the downside. There's just a lot of easy policy has already been priced in. So I think the market is, and granted, it is pricing in a couple more cuts. They haven't happened yet, though. But I'm just a little worried, like looking at everything. I think that over the next month or two, I think the move is more likely to be down than up in the miners. That's what I would say. So I would be really surprised if they broke above that 2016 resistance and kept running.
Okay, you're not alone in saying that. I know a lot of people are kind of looking for a general kind of downward move, just more or less a natural correction in the miners, the mining stocks, and even in gold. But you know what? In these overbought levels, it can run a little bit further than people think. But I'm still on your side, thinking that a little correction is due. And you know what? That's another good opportunity for investors to take some positions in the stocks they own. Jordan, how does the dollar play a role in all of this? Are you watching the dollar closely, and do you think that the dollar may be able to move up and that could also hold back the overall gold sector?
That's a good point, Corey. It's very possible. I haven't been watching the dollar all that closely. It just seems to slowly be making its way higher, but at a real glacial pace. It's a very slow, weak uptrend, but an uptrend is in place. It's a good question. I mean, if it pops up a couple more points, that's something that could give the miners and the metals a gentle correction, I would say, because what's been happening is, you have all the amount of negative yields rising all around the world. That's bullish for the dollar, but it's also bullish for precious metals because outside of U.S. government bonds and U.S. corporate bonds, you can't get any yield anywhere. So outside of those things, the fundamentals for gold with respect to interest rates are extremely strong. And that's why gold against foreign currencies is basically at an all-time high. So I don't think a rise in the dollar here is that negative for precious metals. I do think if we get a rise in yields in the U.S. and we see a rebound in the stock market, I think that would be more negative for precious metals than a rise in the dollar. So that's how I would look at it.
Okay. Hey, Jordan. Great chatting with you. I always enjoy hearing what your technicals are showing you, and I also liked your comments that you just don't really care what comes out of Powell's mouth on Friday. It's going to cause some short-term volatility, but it's much more important to drive down into the stocks, especially if you are invested in those, and the trends rather than getting distracted by day-to-day news, which I know everyone's going to be watching closely for the end of this week, but that is just going to be some short-term news that who knows? You might always get a tweet from President Trump that can cause some more volatility shortly after. That seems to be a trend that we've been dealing with as well. Jordan, good chatting with you. Thanks again for your time, and have a great rest of your week.